At the end of every month, it's a good idea to go through your sales history on Amazon and record what has sold. So, in our prior example, when I recorded inventory purchases, I had an example where I showed we had purchased a total of $1,000 before taxes of SpongeBob toys. Now, let's assume at the end of that month, I sold half of them. So I sold $500 worth of the SpongeBob toys. How would I enter that into my QuickBooks Online accounting software and create the correct double entry accounting journal entry to record that transaction? That sounds complicated, I know. It's simple accounting speak. You'll get used to this, but it's really easy. So, again, we click on the plus item here, the plus symbol, journal entry. Okay. And we're going to click on here and we're going to say inventory asset as the first item on the ledger. And the second item is going to be the cost of goods sold. Okay. So we are going to credit in this case because we're assuming we've sold half of our $1,000 worth of SpongeBob toys. That would be $500 out of the 1,000. So we're going to credit inventory by $500. And now we're going to debit our cost of goods sold, because remember, an item only becomes a cost of goods sold when it has actually sold. So we're debiting on the second transaction our cost of goods sold. So we'll say SpongeBob toys sold quantity of 10, right? Because originally we'd purchased, in my example, a quantity of 20 of these, and the total cost was $1,000, and now we've sold half of them, 10, for example purposes. And we're going to put in the sales tax here. That's important. And in my example, we paid HST Ontario. So we're going to say HST Ontario purchases, and do it again here, and hit save. So now at the end of a month, for this example, we've just recorded a sale of half of those items. So now if I go to my reports and balance sheet and click on inventory asset, I can see it down here, journal entry 16. It has taken $500 out of my inventory. So my inventory amount has reduced by $500 because those are now gone. They're sold. And if I go back to that balance sheet report, if I go to my Visa credit card, you can see that it hasn't changed on the balance here. However, if I go to my cost of goods sold under expenses, which should be showing up under our profit and loss statement, you can see this journal entry was applied here. So it added $500 to our expense of cost of goods sold for that month of $500, increasing it in this case from $9,664.68 to $10,164.68. So in accounting and for the CRA purposes, we use the double entry system of accounting. QuickBooks makes it really easy to record both of those transactions. So I'm going to go through that again just to make sure you're clear on how I did that. So I'm going to go to reports. The first thing I want to do is go to my balance sheet, okay? And I want to be able to see my inventory assets, which I click on here. And you can see in this example, we sold $500 worth of the SpongeBob toys, which was a quantity of 10 out of the 20 I used in the purchase example, which reduced our inventory by $500. And then the expense shows up under reports, profit and loss. And if I go under costs of goods sold, you can see the expense was added of $500, which became a cost of goods sold. So at the end of every month, if you do those simple two transactions in a journal entry, you will be able to keep on top of your Amazon inventory levels. Again, Very simple. This isn't designed for multi-million dollar sellers, but for the average Amazon seller, keeping track this way is a fairly simple way of tracking your expenses.